Good afternoon, everyone. Tomorrow morning, we will know the latest inflation rate figures, and tomorrow's figures are the most important in a long time for several reasons. Firstly, the Bank of England Monetary Policy Committee is due to meet on Thursday, where they are expected to raise rates again. However, what they do or how much they raise interest rates by does depend on tomorrow's figures. If the rate begins with a 7, then we can expect at least a 0.25% rise. If, however, the figures tomorrow begin with an 8, then we could expect a rise of 0.5%. Traders are already betting on interest rates being 6% by Christmas, possibly more, which will signal more misery for borrowers across the country, whether it's on their mortgages, business financing, or whatever the case may be. It's quite interesting, the situation that millions of people are finding themselves in the country with regards to housing. If we take a look at the figures for housing as a total in the UK and just how much wealth there is invested in property in this country. Just for the record, there are 28 million homes with an estimated current average value of £287,000. That makes a total of 8 trillion or just over. There are 1.6 trillion pounds of mortgages against this property, just 20% of the total value, which leaves a total equity wealth in property of 6.4 trillion. There are 11 million mortgages, 17 million properties owned outright, 4.6 million properties in the private residential sector, of which 3 million are owned outright, and 4 million properties in the social sector. Overall, the debt as compared to the total value of properties is very, very low. And yet millions of people are struggling with buying or renting a property. And this is because in recent decades, the price of property, the value of property has been disconnected from the average person's ability to pay. The average salary has become less relevant to the value of property as more and more people are able to buy property thanks to inheritance and the bank of mum and dad. But what about everyone else? This situation has caused a skew and created a nation of the haves and the have-nots, or the homeowners and the tenants or the homeless. That's down to bad policy from the government, and sadly this has been accelerated and exacerbated by less and less homes being made available to first-time buyers and less opportunity for them to get on the ladder. And this is a very, very important issue and something that needs to be addressed. There must be policies implemented to enable young people to buy their first home without having to be in so much debt that the odds of being able to sustain the payments on that property are at risk, or are as at greater risk as they are now and in the immediate future. To answer one of the most common questions is, if you're thinking about moving, when is this going to settle down? When should you be looking at moving? That depends on your situation. I stand by what I've said about first-time buyers with very small deposits. in my opinion, for what it's worth, I would not sign on the dotted line now. I would certainly not encourage any first-time buyer to buy property with 100% mortgage, although hardly anybody can manage to actually fit that criteria to do so anyway. But if you're buying with 100% mortgage or anything less than 15 to 20% deposit, you are at risk of being in immediate negative equity or finding yourself in negative equity within the year. Personally, I feel that peak to trough will be 2 or 3 years. If we take the peak as last year, I don't think we will have reached the bottom even by the end of next year. I think that will come in Q1 or Q2 of 2025 as things stand, but who knows how things will change. If you are a next time buyer, if the property that you're looking to buy or the manner in which you are going to fund that property, it does not put you in any risk whatsoever, and you do intend to stay in that property for, let's say, 5 years or more, what happens in the meantime is little more than a blip in the value of that property and not something that should deter you from moving, especially if the property of your dreams comes along. I know streets where no property has come up for sale in that street for well over a decade. So if property were to fall and you were to wait and miss out on a property that may not come up again, it wouldn't benefit you if 6 months or a year later property prices have fallen further, but you can't find the house that you want, or you missed the house of your dreams because you were hoping that prices would drop further. There's also another factor, that because more than half the properties in this country are owned outright, many of those people would not consider selling in a falling market. And of those who are mortgaged, there is also a large percentage whose mortgage is negligible as compared to the total value of their home or their income. Once again, those people won't sell because they don't need to. So what often happens in a falling market is that initially, like now, we are seeing more and more higher end properties come to market. Those are people who need to sell, but somewhere down the line we find that the supply also begins to dwindle, because as prices are low, many people decide not to sell now and wait until the market begins to turn. So if you are in a position to move and you find the house of your dreams and you have done your sums, there is no reason for you not to move, because life is to be lived. And would you want to spend another 2, 3, 4 or 5 years in a home that you don't want to be in because you're hoping to get the home of your dreams at a slightly lower price if it becomes available? These are points that are definitely worth considering. We'll see what happens tomorrow and on Thursday with interest rates. But in my opinion, taking a look at the overall figures of the state of the property market, it is almost a political and social crime that we are in the same situation that we are in at the moment. There is absolutely no excuse for the lack of house building, because there are so many people out there with money and money to invest, looking for opportunities. The Exchequer could create incentives to encourage those people to invest their money into building homes that could be made available to people. In terms of overseas investors, there are over 50,000 properties in London that are empty, just a car park for people's money in other countries that they just wanted to park safely in London. And if we were to consider take into account the Bishop's Avenue in London, for example, a beautiful street with beautiful houses, lots of overseas money ploughed into it in the 80s, and many of the houses have just been left there abandoned and they're falling apart. Once again, there is legislation that the government could implement to put overseas investment to better use. For example, in Australia, overseas investors can invest in the property market, but they must generate more residential units than they are buying. You cannot just go and just buy up property to park your money and leave it there, but you can invest your money in a development that will create more homes. So why are they not doing it? And why are they leaving so many people in such dire straits? I think it's a disgrace, and this is a cross-party matter of shame, because they're all as bad as each other. That's all for now. I'd love to hear your thoughts. As always, if you have any questions, feel free to get in touch. I'm sorry I don't always get back to everybody. I don't always have the time. I do try, and I will see you in the next video. Bye bye for now.